Welcome to the daily insights that matter. Now, if you're a salaried employee, there is some good news for you regarding the Employee Provident Fund. Now, the EPFO or the Employee Provident Fund organization has announced a higher interest rate on the mandatory deposits that you've made. Now, before we dive deeper into the news, it's essential to understand where your money is being invested. The Employee Provident Fund serves as an automatic savings tool for most of us, affecting our take-home pay and offering tax-deductible contributions. Now, despite being the primary retirement savings tool for many Indians, we don't fully understand how the money contributed to the Employee Provident Fund is invested further. Now, did you know that the Employees Provident Fund organization invests in equities too? Well, the Employee Provident Fund is primarily a debt product. The funds are invested majorly in debt products like government securities, etc. However, about 15% of that money is also invested into equities. Now, speaking of the interest earned on these deposits, the Employee Provident Fund organization has increased the interest rates to 8.15% for FY23, which is slightly higher than 8.1% for the previous year. Interestingly, the previous year's rate of 8.10% marked the lowest return in the last 40 years, as the rates have fluctuated between 8.5% and 9.5% during this period. Now, the EPFO or the Employee Provident Fund organization is amongst the largest organizations globally in terms of its customer base and the magnitude of financial transactions that it handles. Now, the current subscriber base exceeding 6 lakh members will now enjoy an increased interest rate of 8.15%. The investments made under this scheme generally follow conservative practices and adhere to the guidelines set forth by the Finance Ministry. Now, while the hike may seem like a modest hike of only a 0.05%, it becomes significant when compared to the interest rates offered by other savings schemes. Now, this also highlights that the Employee Provident Fund remains an attractive option for depositing funds with the assurance of a fixed return. Now, the US Fed has taken a tough stance to control rising inflation by raising interest rates, resulting in the USD gaining strength. Now, as the US dollar appreciates, it puts pressure on other currencies worldwide, especially in emerging economies like India, which has also been affected. Now, interestingly, the Indian Rupee, which fell 10% against the US dollar in 2022, has made a comeback in 2023 by appreciating. It recently hit an 11-week high against the US dollar, driven by strong foreign portfolio investments or the FPI inflows. Foreign portfolio investors have shown a remarkable shift in their interest towards Indian equities. After being net sellers in the last 2 financial years, they have intensified their investments within India since March 2023. In 2023 alone, they have invested around 1.35 lakh crores in the Indian equities, with July witnessing inflows of up to 43,399 crores. Now, this marks the 5th consecutive month of FPIs being net buyers of Indian equities. Now, this trend has bolstered the Indian Rupee, as the increased foreign investments in assets like stocks and bonds necessitates the conversion of foreign currencies into Indian rupees. Now, this surge in demand for the Indian rupees has resulted in its appreciation, strengthening its value. Now, the recent appreciation of Indian Rupee is mainly attributed to the strong FII inflows. However, it's crucial to acknowledge India's ongoing efforts to promote the use of the rupee in international trade, indicating a step towards de-dollarization and currency diversification. Nonetheless, breaking free from the dominance of the US dollar is not an easy task, considering its reputation as a safe haven currency and its global acceptance. Looking ahead, the long-term prospects of the rupee becoming a global currency rely on various factors such as export growth, capital account convertibility, and sustained economic development. While obstacles persist, these factors might contribute to the rupee gaining more recognition on the international stage. Now, in the short term though, the movement of the rupee will be influenced by the outcome of the upcoming Federal Reserve meeting this week. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com